So just between us girls, Janet, what you really thinking? Investor Beat starts now. Thanks for watching. I'm Alison Southwick. The market didn't do too much today in anticipation of the Fed concluding its regularly scheduled full committee meeting. The Fed will release a policy statement and hold a press conference this afternoon outlining their view on the economy as well as updated forecasts. Joining me now in studio to talk about it is Bill Barker and Matt Argersinger. So the press statement just came out and the press conference is probably going on right about now. But what have we seen so far? What do you think is going to dominate the press conference?
I think the major point coming out of the statement was the loss of the benchmark, the 6.5% unemployment benchmark, which is what the Fed was targeting for to get through, and then they'd start raising rates. That was no longer there. Instead, the Fed's talked about they're going to be using a variety of things, inflation rate and unemployment and the size of the workforce and things like that to gauge where interest rates are going to be. That's at the same time they still said, we're holding that benchmark rate low. It's going to be low for the foreseeable future, and we're not going to make any moves there. So I think that's probably what's going on. I think what people are asking Janet about is, well, what are you guys actually looking at? What benchmarks or figures are you guys going to be tracking to determine when to raise interest rates? I'm sure that's what's happening.
Probably some curious cocktail, I'm sure, of numbers and whatever. What else stood out to you today?
Well, the normal level of interest ahead of this was met, I think, once again by, for the most part, not very much new news, some fine-tuning of things that are already out there, an indication that interest rates are going to remain low for a fairly long time. I don't think anything has really changed today. The economy is marginally better than the last time they talked about it, which there's plenty of other data out there to already know, but it's not really fundamentally different. No reason to start looking at higher rates yet.
Right, so nothing fundamentally different, but the market's selling off after the news.
Yeah, I'm kind of perplexed by that. I can only think that maybe with the way the weather's been and maybe we have had some slightly weaker economic numbers that some investors were expecting the Fed to maybe stop its taper or at least postpone it for a while. That didn't happen. The Fed maintained its $10 billion reduction. Monthly reduction in its stimulus, so can't explain why.
Yet another day where the market's going to do what it's going to do, and we'll keep investing how we invest. All right, let's move at take a look at some of the day's movers and shakers. First Solar is up after the company raised its guidance on net sales to $4 billion for the year. The company also announced a partnership with GE. First Solar rallied. Meanwhile, SolarCity took a hit. Did they deserve that?
Oh, no way, no way. SolarCity's the better one here. No, First Solar, great results. They've raised, they're putting out some pretty good guidance for the year ahead and for the year beyond that as well. This is not where you want to be, though. I mean, First Solar obviously is involved in the actual making of these solar panels. They're in the hardware space. One number that stood out for me is if they're guiding for gross margins of 16 to 18%. Well, those gross margins were over 30% just a few years ago. So that just shows you where they are in the product cycle, that their products are getting cheaper, which you expect. As the technology gets better, prices usually come down. So I don't like First Solar from that perspective. I much prefer SolarCity, which is sort of involved in the service area. It's got a heck of a value proposition for customers. And of course, they benefit when solar panels get cheaper, whereas First Solar doesn't. So much better. I'd much rather be betting on SolarCity than First Solar.
All right, KB Homes is up today after announcing that revenue and net income were up for the quarter. This is the first quarterly profit since the meltdown of 2007. So, should investors be looking at housing now? Is it back?
Yeah, well, I think that housing does have, from a longer-term perspective, a long way to go to get back to not just 2007 levels, but earlier than that, a more normalized rate. It's still a very, very slow environment for home builders in terms of looking at their historical numbers. However, it's a lot better than it was. It's got a lot longer to go. If you're looking the next 5 to 10 years, I think home builders have a long way to go.
So patience. Oracle is down after missing analyst expectations for the fourth quarter. Profit and revenue were up, but growing pressure from younger, more nimble competition means the 40-year-old company has a lot of catch-up to do. So can the tortoise get back in this race?
I don't know, Alison. It's a snooze fest when it comes to Oracle and a lot of big tech. I mean, Oracle's a massive company. It already dominates its markets in a lot of ways, and so you can't really expect more than sort of single-digit sales and profit growth going forward for Oracle. they had some good numbers in their cloud application service. It was up 25% there, but it's just not big enough yet to move the needle. I'd much rather be looking at a smaller company, like you said, like Ultimate Software, for example, which competes with Oracle in the human capital cloud software space, but where Oracle is already so big, and so it's just, you're not going to get a lot of growth out of them. I'd rather go small, just like you said.
WisdomTree Investments took a hit today after a Citigroup analyst downgraded the ETF maker to sell. Competitors like Waddell & Reed are gaining on them. Meanwhile, executives are selling off shares. So, Bill, WisdomTree saw a 189% surge in 2013, but so far in 2014, a 22% decline. What's up?
Well, I think the question answers itself. After a run like that, and it was a great year for asset managers everywhere in terms of the growth in assets last year. It's been a lot slower so far this year, in part you couldn't duplicate that level of growth. You know, if the market's not going up 30, 35% as it did in 2013, your assets aren't going to grow as much. I think there's a lot of reason for insiders, whoever, to look at a 200%, nearly 200% gain, take some profits. The business is still fine, but you know, there's valuation concerns.
All right, well, that's going to do it for today. Let's take a look ahead. What is one stock on your radar?
Sure, it's Yandex. It's the sort of the Google of Russia. It's Russia's leading search engine. Absolutely killed since the Ukraine crisis began about a month ago. It's down about 25%. Again, I think Yandex's business, the growth that they're having, the dominance they have in internet search in Russia, 60% share, just transcends everything that's happened between Russia and Ukraine. The potential for a Russian economic slowdown, potential sanctions from Europe and the US, those are all short-term headwinds for sure, but I think there's a lot of potential here. I look at the company at the 25% drop in the stock price and I say there's potential here.
All right, how about you, Bill?
I'm looking at Lennar Homes, which is reporting tomorrow morning. Like KB, I expect that it's going to beat its numbers. Others in the space, TriPoint, there have been a number of good reports from the home building sector for the quarter. Enough of these, you might see some direction on the home builder stocks that isn't just dominated by interest rate concerns.
All right, well, for Bill Barker and Matt Argersinger, I'm Alison Southwick. We'll see you tomorrow.